folks, Dan Frio here, the Mortgage Update. Today is July 24th, 2020. I'm trying to get this audio down. I keep tweaking it when I'm recording. I keep tweaking it when I'm editing, and I'm doing my best. I actually think I'm going to get a boom mic. So, that being said, what's going on today with rates? I don't know if you guys are watching any of the news, but there's a tiff going on right now with China and a whole bunch of other things. Honestly, following that, I thought we would have a really good day in the MBS market, but we're not. So let's get to it. And here is where we are today. So MBSs are down 8. Why do we follow this? So for the newbies watching the channel, this is what's going on with the price of mortgage-backed securities. What are mortgage-backed securities, you might ask? Great question. It's actually a bond that trades on Wall Street as an investment that is basically a batch of mortgages sold on Wall Street as an investment. That's the best way to put it. So it's a bond, and it trades. And this, what we follow here, this number here, is what's happening to the price of a bond. And just bond 101 or just some bond basics, the more you pay for a bond, the less the yield. So we like when this number is going up. When the number goes down, that means the price of the bond is going down. So the lower the price you pay, the higher the rate or the yield. So we like to see this number in the green going up, because that means lower rates. So we had a nice little trend. You're going to see a lot of stuff right now, and hopefully you watch my channel on a day-to-day basis, because the headlines on some of the media is out there saying mortgage rates just hit another record low. Well, if you follow me, we follow tick by tick by tick, and we are not at the low. Look right here. And this is, again, as this goes up, the yield or the rate comes down. Well, how are we at an all-time low here if right here we were higher? So the media is, let's say, a week or two behind the bubble. That's why I ask you to help share this video, send it out to family, friends, relatives, realtors, loan officers, anybody. Follow the channel. I have a lot of realtors and loan officers following my channel as well, because they're like, I didn't realize that. I always was taught to follow the 10-year Treasury or the this or the that. No, guys, it's this here, the mortgage-backed securities market. So I monitor this all day long. You don't have to do this. I'll do this on your behalf, because a lot of the stuff that I use, the economic calendars, the charts and everything, they cost thousands of dollars a year to subscribe to these systems. And all you need to do is subscribe to my channel on YouTube. You can do that right down below. Just hit subscribe, hit the bell, and I post every day. I try my best to post every day. Some days get longer than normal, and I run out of time at the end of the day, and I just can't. But I try to do this every day. So that being said, some of the economic news that came out today is basically new home sales, and it's blowing the roof off. I'm going to show you some of these right here. New home sales explode. What do people know? What are all these people realizing? Why is home ownership such a good thing? Well, I'm going to get to a mortgage calculator here in a second to show you how much are you paying in rent right now. Could you possibly buy a house and have the same payment or less? And then also, as you're building equity in that home, you're making mortgage payments, driving down the loan on the house. The house is appreciating in value, plus in a lot of cases you get a lot of tax benefits. So the house value is going up, the loan balance is coming down. You're building equity there, and again, getting a lot of tax benefits in some cases. So what I watched, basically some of the news that came out today was the housing news. But you can see, some of the headlines that came out today. Manufacturing and some other charts. I'm not really going to go into that again, because the Fed is the one controlling a lot of this. The bad news is today, the Fed is starting to kind of buy less of these bonds. So here's what's going on right now. In the past, several months, especially since the pandemic hit, look at these charts. Okay, this is nuts. This is nuts. What happened here? Well, the pandemic's hitting, everybody's freaking out, and so forth. Well, the Fed stepped in right around here and said, you know what, we have to do something to stabilize the markets. So a lot of people don't know this, but behind the scenes, the Fed stepped in and started buying bonds, especially mortgage-backed securities, in the tune of $4 to $5 billion a day. Today they kind of teetered that back a little bit. They usually exceed $4 billion. Today they hit right around $3 billion. So that gives us less demand. Therefore, it moves the market. So that's what's basically happening right here, and that's what I'm thinking. Basically the little blip in today's radar. What I thought was going to happen is when this all the news of China came out, and they're retaliating against the U.S., is it's going to really crash the stock market. When people pull out of the stock market, what they do is they take that money, they don't put it under their mattress, they put it in some other investment, and usually they buy bonds. So there's stocks and there's bonds. So you put your money in stocks. Well, let's say you have $100 to invest. You want to invest everything? Well, you put all $100 in stocks. Well, if things are starting to look a little squeamish, you might, say, I'll only put half in stocks. Take that other half and put it in bonds. Things are really looking bad. You pull everything out and put it into bonds. One of the biggest investments people use is mortgage-backed securities because it has a higher yield normally than a lot of the treasuries. And it's usually pretty safe and stable, other than 2008 to 2010. So that was the thinking behind this. So between that and China, I was thinking we were going to get a good rally today. 8 really isn't an adjustment to make me knee-jerk one way or another. I'm not locking anybody. I locked a lot of people the other day when right in this area here. Let's see here. Right in here, I was locking some people. And I locked a lot of people right here when we hit this this right here. And we hit that ceiling here. We hit the ceiling here, and we eased back both times. What are all these lines? Well, these are a lot of technicals that we follow. They're Fibonacci levels. I won't explain what that is. Basically, it's ceilings and floors that we follow. And there's moving averages that we follow. So one of the ceilings is right here at this level, this first red line right here. You can see we hit it here, and it hit and came back. Then we dropped. And then the next day we hit it, dropped back down. Teetered, hit it. And I'm thinking, okay, we just hit it. Normally there's a head and shoulders chart that I follow. Usually when you hit it, it's going to plummet from there. So I locked a lot of people right in here. And that's why. I won't go through the head and shoulders and all that. Trust me on this one. I got your back if you're using me. A lot of these other technicals are moving averages. So you look at here at 25 DMA was days moving average, 50-day moving average, 100-day moving average, and you can see where these lines are. We're over all of them. So this is making me kind of leery, but again, the Fed has stepped in and they're controlling this market. Now, when the Fed moves out, what's going to happen? We could have a drawback. Where we should be is probably right around in here, but we're not. And then this coronavirus pandemic, if it starts to get worse again, we might see some other uncharted territories and lower rates, but I don't really think we're going to get there. I think basically we're teetering at the bottom, and you can see that by these technicals right here. Okay, so that's my prediction for that. And again, the economic news, there's nothing really out today that surprises the market other than housing demand is huge. So what do these people realize that maybe you aren't realizing? Well, home values are going up, sales are going up. There's a sweet spot right now of homes between 200,000 and 300,000. So let's just, for example, how much are you paying in rent? Well, it's probably, if you're in Chicago, California, New York, Florida, you're probably paying in the tune of $1,500 to $2,000. What would that get you if you were able to buy a home? Well, I put the numbers in here. You can go to my website, therateupdate.com, hit resources, go down to mortgage calculators and click it. And then you're going to go over here to the mortgage calculator. It automatically feeds in a $250,000 purchase price under conventional terms. First-time home buyers, you can get away with 3% down when you're buying a house. So $250,000, 3% down. The rate we're going to put in right about 3 let's go to 3. What's this going to do to you? This is based on information, I think, in California, if I realize right. Yep, California, Orange County, just to give you the details behind that. So you go over here, what would that payment be? $1,500. Right here, the taxes and HOA, that might be a little shy on a $250,000 house, might not be because it's $3,000. That's pretty common out in California area. So, are you spending $1,500 right now or more? Well, maybe you might want to look at buying a house, especially in a lot of these areas where appreciation is just killing it. So that's just an idea. So that is my report for the day. If I could be of any help to you, just go to my website, The Rate Update. I'm keeping you up to date on rates. So therateupdate.com. You can get a hold of me personally at 844-775-LOAN. And that's 844-775-5626. Shoot me an email at dfrio, and it's Frio. So D for Dan, Frio, at preferredrate.com. And I'd love for you to subscribe to the channel. If you would, please don't forget to give me a thumbs up. Subscribe down below. Click the bell so every time I do post something, you get an alert. And if you're a realtor out there, a loan officer, I'd love to hear your comments. Let me go over any questions that you might have that you're running into dilemmas on. I might even be able to help you with some marketing and some other ideas for you. To even like realtors out there, if you're looking to partner and figure out some ideas on how to get more business, I'd love to help. So God bless. Have a great weekend. I'm getting out of here shortly, and I'll see you next week. Same time, same place. Bye-bye.